we come to one of the very best topics in the syllabus, something called bank reconciliation statements. The reason why I say it's one of the best topics is that it's frequently examined and it's something we can relate to. Most of us have bank statements, money in the bank, money we take out. Where do we stand at the end of every month, at the end of every week, that kind of thing. Now, most businesses need to know that, especially in the current climate, where it's a little bit tight on cash and banks are being quite strict as to what company balances are, businesses' balances are. So it's something that is even more relevant today than ever before. I remember when I started as a student, the first task I was given as I began my training contract was a bank reconciliation statement. I think it was a music company, something like that. And I couldn't believe it when I actually got it to balance. So it is something that is possible to do very well on in the exam. The examiner likes it, frequently examines it, and it's one of those topics that lends itself perfectly to a 2-mark, 3-mark type of exercise. So obviously our questions are all of 2 marks duration. So occasionally some of the questions are slightly longer, some of them are a bit shorter. So bank reconciliation statements comes up regularly and you will get it right. You will get it right. I'll make sure you do by explaining it carefully. It's one of the great topics. I have a certain feeling for this. It comes up regularly and you will get it right. It'll make a big difference to your passing. So let's turn therefore to page 58, where we have a few ideas about bank reconciliation statements. When you have completed this chapter, you should be able to prepare cash and bank accounts, prepare a bank reconciliation statement, etc. Obviously, what we've got to make sure of is, first of all, that we understand that if we've got money in the bank, in the company's books, it shows up as an asset because we have money in the bank. And assets, if you remember, are debits. So that is the first most important point. If we have money in the bank, we have an asset, and so it is a debit balance in our cash book, which shows up in our trial balance, of course. Now, from the bank's point of view, it's obviously going to be a credit item, because if we have money in the bank owes us that money back. So from the bank's point of view, standing over here, from the bank's point of view, obviously it's a liability, so it's a credit balance. As I'm sure we've said before, if you're looking at bank statements, it's simply a copy of the bank's records, the bank's perspective, the bank's point of view. So never confuse the company's point of view with the bank's point of view. From the bank's point of view, that money is owed to the company, so the bank has a liability. Therefore, in a bank statement, because liabilities are credits, it'll show up as a credit balance. So you must be very clear throughout accountancy, from this stage upwards, that the company's perspective is different to the bank's perspective, or an individual's perspective is different to the bank's perspective. So we're doing this usually from a company's point of view in the exam. So within the ledger account is a bank ledger account. Now that bank ledger account is what's known as the cash book. So I'll just say i.e. cash book. So the bank account ledger is the cash book. And it's important that the balance in the ledger reconciles to the balance on the actual bank statement. And that's why we call it a bank reconciliation. We're trying to reconcile, we're trying to agree these various balances. That is to say, once we get the cash book corrected, we then attempt to reconcile it with what the bank statement says. A very straightforward exercise. Dependent on the size of the company, this can be done on a weekly or a monthly basis, and in some larger companies, even daily. Preparing a bank reconciliation has many advantages. They include provides a check on the accuracy of recordings. Now, these are little points you need to remember. The examiner might say to you, please, can you choose between these various items as to which are advantages in preparing a bank reconciliation statement. So you must have these points well organized in your mind. The biggest secret, of course, with accountancy is understanding what you're doing, not just mechanically doing it. So, can I ask you to stop the tape now and learn these items? And the whole idea, of course, behind it is cash management. Right, debits and credits. On a bank statement, the balances will be from the perspective, the viewpoint of the bank, not that of the business. Very, very important indeed, as I was explaining a few minutes ago. So if a bank statement shows a credit balance, the bank has a creditor. Obviously, the bank owes us money. In other words, the bank owes the business money and is therefore in a positive, and therefore the business is in a positive position. Can I just improve that note? And the business is therefore in a positive position. So be careful with that. If the bank statement shows a debit balance, this indicates the business is overdrawn. It is an asset from the bank's point of view. As you and I know, from time to time this happens to us. But for a business it's much more serious, of course, because with the current economic climate, it's quite possible that banks might say to the business, look, you've been overdrawn for a long time, give me your business forecasts and so on for the coming year, and if things are not, don't look very good, the bank might well say, I'm going to foreclose, going to close the account and so on. So it's huge pressure for a company. The company must know exactly where it stands on a regular basis. Much more sensitive issue these days. Right, I move on then to page 59 as we consider some more of these issues, please. Reconciling items. It is extremely unlikely that the balance on the ledger account, which is of course the cash book, the ledger account or cash book, and the balance on the bank statement will agree. In the exam, it never agrees until you get involved and sort it out. But as you pick up the exam question, it will not be in agreement. This can be due to the following reasons. Checks issued by the company are immediately entered into the cash book, but they will not appear in the bank statement until they are presented to the bank. So what happens basically is something like this. You write out a check. Let's say you're representing your company. You write out a check from the company's checkbook. Send it to someone you owe money to, maybe someone who supplied you with some goods. So they are your payables, so you have to pay them. So once you pay it out, you write it out in your cash book on the credit side because you've paid out $1,000 or whatever it might be. From the bank's point of view, they don't see that check until your supplier, who received your check a couple of days after you posted it to that person, and your supplier presents it to their own bank, the supplier's own bank. And their bank comes to your bank and says, hey, can you pay this $1,000? Now, all that takes a few days. Sometimes it could take up to a week. So during that time, if you have a year end or a month end or whatever it might be, when you're drafting this reconciliation statement, inevitably there will be a few loose items that haven't been crystallized, haven't crystallized yet, the situation. So basically what happens is you've got to accelerate the process because you've written it out of the cash book, but because the bank statement hasn't yet reflected it, you've got to make it look as if it has gone through. So that's what's known as unpresented checks. So please underline that, unpresented checks. Some useful expressions here, that's one of them. Receipts by the business are immediately entered in the cash book and then banked. This can take a number of days to clear. Now this is what's known as uncredited items. Number of days to clear. There may be items in the bank statement that have not been processed through the cash book. So do you see that the second bullet point there is exactly the opposite of the first one? So if you have unpresented checks, which is the first one, the one I explained, the opposite of that, of course, is uncredited items. That is to say, where, let's say your customer who you've sold goods to pays you some money by way of a check, say $500, and you put it into your cash book because you've just received it, and then you take it along and put it into your bank account. Your bank then approaches the customer's bank and asks for the money. And that process takes some time. But because you see the cash book is up to date in respect of this item, but the bank statement lags behind by about a week or so, what you need to do as you attempt to reconcile the two items is to make the bank statement reflect what it hasn't yet reflected or what it might reflect after the year end. In other words, you accelerate the process is the best way to understand it. So those two are opposites. And you can imagine a small bank reconciliation statement coming up in the exam for a couple of marks. One item from each of those, or even two from each of those. That would be a fair test as a 2-mark exercise. Now, there may be items in the bank statement. I read on now to the third item. There may be items in the bank statement that have not been processed through the cash book, something called a BACS transfer. Now, BACS is something peculiar to some countries. It comes up in the notes, so I better make clear to you what it stands for. It stands for the Bank Automated Clearing System. To write that. Clearing BACS. Bank Automated Clearing System. Just some system that banks have, especially nowadays, using technology to speed things up a bit. BACS transfer, standing order. Now, what's a standing order? In some countries, what happens is the company would order our bank to pay to someone a certain amount of money on a certain date every month. Let's say it's rent for the business property that the business is using. So if you have to pay something on a particular date, and you might get into trouble if you forget because you're so busy, you say to the bank, please, you take the responsibility on the 5th of the month, every month you must pay $5,000, whatever it is, for the rent of the premises, probably $50,000. But it is a serious sum of money. But the most important thing is it must go out on a particular date. So you're saying to the bank, we order you to pay this money out. Do you follow that? Now, what's a direct debit? The next item mentioned there. Very similar, but this time you say to the person who you owe money to, you contact our bank, and on a certain date of the month, our bank will definitely pay you. It's very, very similar to a standing order. A standing order is where you tell your bank to pay out. A direct debit is where the person who you owe money to, they contact your bank and ask for the money. Obviously, it's within certain limits, so there's no abuse. You might say the figure must be between 100 and 130, something like that, and anything beyond that is checked and maybe refused. But usually it goes through very smoothly in many countries of the world. It's a very similar concept. But would you agree things like that, the cashier who's maintaining the cash book in the company may not be aware, may not have remembered that these things are going to go through, but the bank would have put them through on the bank statement. So those are examples of the cash book needing to be amended before it can reconcile with the bank statement. Those are quite interesting items. Dishonored checks, what's that? I suppose that's where a supplier gives me a check and I take it along to my bank and my bank goes to their bank and their bank says, sorry, these are hard times, haven't got money in the bank, this is a supplier's bank, so can't pay you. So their bank says that to our bank then says it to us. Remember that check for $1,000? It's not of any use whatsoever. Basically, the check is bounced, as they say, and it's dishonored. So naturally, that's something that the cashier who's maintaining the cash book is unaware of until the bank system relates that to the cash book, the person who's operating the cash book. So that's another example where the cash book will be behind the bank statement in terms of knowledge. So it has to be adjusted for in the cash book. Bank charges, of course, as you and I know, are what the bank charges us for maintaining the account, maybe for exceeding our overdraft limit or whatever it might be, for handling exchange currency in foreign currency exchanges, etc. So that's the kind of thing we're talking about. Right, let's read on. We have to face, of course, a pro forma, a format for the bank reconciliation statement. You start with the balance for the bank. You then take away the unpresented checks. Notice the word less. And then you add the outstanding lodgements. Those are basically uncredited items. Lodgements are uncredited items. Lodgements is you put something into the bank. And then you have the balance for the cash book. So a link must be made between this, and so it goes on, and eventually it comes out to this figure. So the 65,455 is connected to the 65,205. Quite close, some of these figures, so you must be really careful in the exam to be precise, work these figures out precisely. Okay, preparing a bank reconciliation statement. Let's move on. Compare the cash book and the bank statement and tick matching items. So I'm going to tick, literally tick, like that. I'm a trained auditor. And for years, we used to use different kinds of ticks when we did certain work. And so I'm very fond of ticks. So it's a nice opportunity to practice a very detailed, very relevant skill. Post corrections to the cash book, items on the bank statement that have not yet been processed through so the word is not. Post means enter. Put in items that are in the cash book that have yet to be presented to the bank as a reconciling item, as we were saying. Unless told otherwise, assume figures on the bank statement are correct. I suppose the logic is the bank has more highly trained staff, they have more technology to use, that kind of thing, whereas a company might lag behind slightly in this department. Now, it's a view you have to take in the exam, and that is traditionally how exam questions have been done. Let's assume if there's anything in dispute, the bank is probably going to be right, and the cashier could well have been distracted or worse, and therefore has done the wrong thing. Right, let's move on as we face our first question. Are we ready? Now, there are two styles of question that you can see there. The first one, example 1, is where we're given a very practical exercise. The question, the example gives us a cash book as well as a bank statement, and we tick off items that have gone through. In other words, common items. And so standing out from that process will be items that have not been ticked off. And obviously those are the ones that must enter the bank reconciliation statement or indeed the cash book adjustment. So there are two tasks once we've ticked it off. One is to reflect in the cash book what the cash book has done wrong or omitted to do. And then reflect in the bank statement on a similar basis what the bank statement hasn't done yet. But the first most important item in this exercise, indeed in practice, is to tick off. And that is a process I want to show you as we start. So the cash book is the bank account in the trial balance, TB for trial balance. Obviously this is the debit side, this is the credit side, and these are all dollars, of course. Now, the starting point, 14,500, looks most definitely a positive balance, a debit balance, an asset, and I'm hoping that the bank statement reconciles at the start. Oh, yes, it does. Look at that. So that's positive as well. So that's fine. I can tick it off. A lot of working backwards and forwards, so please allow for that. That's fine. Now, what I'd like to do is to consider all these items. 27, for example, is a reference. 3650, can I just check to see if the 3650 has been ticked off down here? So I'll tick off that 3650 up there, and there is a 3650 down here as well. So I'll tick this off, and if I just move up for a second, there's a 3650 here as well. What else? The 1200, has that come through? I better make sure it's come through first, strictly before I tick it off in the exam. Yes, it's there. So we're happy with that. So start with one particular statement and tick it off, whichever you want to start with. I'm starting with the cash book because that's the first mentioned. 1100, has that been ticked? Look at the reference very carefully because they may be similar items. Yes, way down here, it seems to have come through eventually. A little bit of a delay there. So what else is there? Be systematic in the exam. Start with the debit side. Tick that off to the credit side of the bank statement. Remember, your asset is the bank's liability. So your debit is the bank's credit, and so on. So tick it off. Be very systematic. Get rid of all the debit items first before you move on. The 3,000 is quite interesting in as much as it hasn't come through yet. I can't see it in the bank statement, so I better just highlight that in some way. In fact, I might call that outstanding, OS or outstanding. Right, let's turn our attention to the other side now. The 450, yes, that's come through, that's good. So that 450 has come through, the 600 has come through, the 750 has come through. Just make absolutely certain we're ticking as we go along. 450, 600, ooh, careful. Which 750 was that? Is that 1439? So it's this 750, you see? It's not the PSL. So this standing order is not to be confused with the 1439. item, that particular reference. Do be careful. So that's quite different. Watch that. So don't tick off the wrong 750. All right, so that's not too bad. Let's go back upstairs and see if we can pick up some more of these important items. The 1440, I can't see that coming through, so I presume that's an outstanding item. So this 150, if you're feeling confident, no reason why not, you can mark that as outstanding. OS stands for outstanding. The 250 looks to be good, as does the 350, because I can see it clearly lower down my page. So the 1441 and the 1442. Notice how carefully I'm checking the reference. This is quite important to identify which one I'm ticking off. So, in case you have to chase up suppliers or whoever it might be, you must be sure that you are aware of the exact situation. Now, interestingly, I can see 3 items that are missing that haven't been ticked. I'm not able to tick these off, presumably because they come towards the end of the month and they might go through early in the new month. So I'll call this outstanding, outstanding, outstanding. The 20,095, by the way, is positive. As we saw earlier on the course, it comes down to that side and still positive on that side. Still an asset, debit. Below the line you see the true nature of these items. So an asset will be a debit balance on the debit side below the line. However, we're doing bank reconciliation statements, so we mustn't be too distracted. Let's concentrate on, have we ticked everything off, or have we identified everything as being outstanding or ticked off? So it seems to be, yes, we seem to be on the right tracks. Let's come here. Have a look. The standing order, I suppose that's an outstanding item, isn't it? So, better put that in a little circle. Standing order. PSL is the person the name of the company we have to pay money to, so that's outstanding. This is Direct Line Insurance, probably. An insurance company, maybe. What else? 3,500 appears to be something that's been put through the bank clearing system that we aren't aware of. I do some work for the ACCA on a private basis, just helping out in a certain matter, and they pay me directly through banks. And it's quite nice to see that unexpectedly on my bank statement. Just to save time and effort rather than writing me out a check. It's not a big sum of money, it's a little bit, but it's useful. Rather than sending me a check and it taking a few days to arrive, maybe even getting lost in the post and doing a covering letter, etc., they asked my permission to just put it directly into my bank account. And I'm obviously happy about that because the money comes through a little bit earlier. But, of course, they will send me a letter a little later to confirm that they have sent it. But it does speed up the process because it's more automated. But clearly, in this particular case, the bank statement has received, or the bank has received that money and is reflected on the statement, but the cash book hasn't yet seen the figure, or is not aware of the exact figure. So the bank will then tell the cashier, and then the cashier will bring that through. So it's like one of those omissions in the cash book, as we will see and deal with in a few minutes. What else is outstanding? I can't see the 500 anywhere, and the reason is it's a bank charge. The bank has charged for its admin work. All right, so there you are. Don't turn over to the solution just yet. What I'd like to do is to put together a bit of an answer. Basically, I'm going to be doing something like this. What is on the bank statement, I'm going to reflect on the cash book because they're mostly omissions or errors, mostly omissions. So anything in the bank statement that is outstanding, I'm going to put into the cash book. And anything in the cash book that the bank is not aware of are things like uncredited items, unpresented checks. Those I will put through. So it's a two-part exercise. You can imagine this coming up in the exam as a couple of marks. It'd be one of the longer questions, but then sometimes you get these objective test questions where you can decide on the answer within a few seconds, 10 seconds. Just read it, yep, that's the answer, A, B, C, it's A, something like that. As we will see later on in the course when we attempt some of these revision questions. So occasionally something like a bank reconciliation statement will take a bit longer to do. So let's attempt this. BRS, example 1. And here we have the solution. So do it with me. Don't look at the answer in the handout. So let's keep about 10 lines or so for the cash book. So I might do our usual T account type of approach. Cash book. Debit, credit, all dollars, no problem. Let's start with the uncorrected balance in the cash book. The month-end uncorrected balance. So on the 30th of April, the end of the month, 30th of April, we have in our cash book a 20,095. Balance brought down. So what is that? You must start with the month-end uncorrected balance. Obviously, as I explained it to you, I'm putting in lots of extra words, but in the exam, just be strict with your time. Right, what do we have to bring in? Just make sure I give myself plenty of room. And then lower down the page, the second half of the page, let's say, this is where I would like to open up the bank reconciliation statement. So here we are, BRS, or bank reconciliation statement, as at 30th of April, whatever year end it might be. So I'll start with the uncorrected month-end balance. So we'll say balance as per bank statement, uncorrected month-end balance. And that figure, of course, 19,550, and that appears to be a positive balance. Just check the question, make sure it's there. Now let's get back to our cash book. Whichever you want to do first, it doesn't make any great difference. If we start with the cash book, maybe one feels we are a little bit more in control of that. Don't forget that the cash book will reflect any omitted items that are reflected currently in the bank statement. So you must swap them over to the other side, cross them over. For example, there's a standing order on the 11th of April of $750. That must come through. There's a direct debit, DD, $750. Use abbreviations in the exam for speed. And there's a backs item of $3,500, the money that we were paid by some outside body. Let's say, I was saying to you, like the HCCA, people like that would pay me occasionally. So I'm not aware of it till the bank tells me what the figure is. And then you have the bank charges, which is 500. And then I suppose if you're confident, what you can do is add it all up. Maybe I'll just be a little bit more cautious than that. Let me do this side in case there's something I've misunderstood in the exam. So let's put that in. I've got to deduct from that unpresented check. So I'll say less unpresented checks. And if you want to put in the references, so much the better. So let's make a list of all the unpresented checks, a few references. 1440 is 150. 1443 is 395. 44 is 165. 45 is 245. And if you add those up, you should be on 955. And you can do a subtotal if you wish, but there's no real need. And then I'm going to say add the outstanding lodgements. Outstanding lodgements uncredited. So I'll bring that into play, $3,000, and adding it all up, you come to $21,595. So let's add that up. Whichever you want to do first, let me just add that up. 21,595, which is obviously the balance as adjusted. And that is a positive balance of 21,595. Let me go back now to the cash book to see whether it agrees. We've got most of our items in place. What I could do, I suppose, is add this up. And that comes to 2,000. And then if you leave a few lines and put in the heavier side on the lighter side, etc., the usual routine with cash books and indeed any ledger account. So this is 23,595. So I'll put that on the heavy item onto the lighter side, and the difference of 21,595 is something that I can carry down as adjusted. And obviously that item can come down here, and we'll call that a balance brought down as adjusted, of course. And that's 21,595, which of course reconciles with the bank statement as adjusted. So let's write that down maybe. something like reconciles to bank statement, give it a nice big tick, and then downstairs, does it yes it does. So we can say reconciles to cash book. Give that a nice big tick. So as I was saying, when you first start out in accountancy as a junior, maybe starting out in practice, they tend to give you these bank reconciliation statements because they feel that you can do something with it. So it's a wonderful practical skill. But obviously to get those jobs and so on, we must first pass. And so to help you to pass, this bank reconciliation process must be mastered. Right, are you ready for another one? Let's go. Let's pick up another one, shall we? Example 2. The assistant accountant of Rainbow, I see, is trying to prepare a bank reconciliation as at that date. The cash book has a credit balance, I see. Credit balance? Is that a negative? I suppose it is. So that's negative. It's like it's an overdraft, overdrawn. OD is overdraft, overdrawn. Of 2,400, beg your pardon, and the bank statement at that date has an overdrawn balance, so that's good. That also is an overdraft of 1,550. So there's a difference there that we've got to reconcile. Now, notice the difference between this question and the one we just did is here the question gives us the errors and omissions listed. In the previous question, we actually ticked things off so as to isolate, to find, to put to one side the errors and omissions. Here it's been done for us. So you must allow for the fact that this is a different kind of question. As his manager, he has asked you for help with the following items. You're acting the role of a finance manager, an expert. So the pressure's on. But be confident, it's such an easy topic, tell you the truth. He has discovered a check, I'm assuming it's a payment, has been entered into the cash book twice. Oh dear. So does that mean I've got to put it back onto the debit side once? And so one of the accidental double crediting will be cancelled. So I put that, obviously if you pay out money, and it's a check that you've put on the credit side twice, if you want to cancel that, obviously you put it onto the debit side once, and so the debit item that you've just put in will cancel the extra credit. So that's the way to think about it. A direct debit of 225 has been taken from the account and not been entered into the cash book. So you just credit it into the cash book to correct it. So the first one will be debited to cash book once. This one here will be credited to cash book. Obviously, that'll reduce the money that you have in the bank from the cashier's point of view. There are unpresented checks, so that's very easy. Outstanding lodgements, very easy. Those go into the BRS, Bank Reconciliation Statement. A check receipt of 1,450 has been dishonored by the bank. Oh dear. So I suppose I better credit it to the cash book. Bank charges, again I must credit to the cash book because I came to know about it a bit later. A bank's transfer has been received by the bank and not yet put into the cash book. So I suppose I better debit that to cash book. And the cashier has entered a check payment number, whatever, into the cash book when the correct amount. So there's a slight transposition of figures. So a busy person has just written the figure down wrong. So if you take 1680 and compare that to, say, 1860, I suppose the difference is about 180, is it? Seems like. So I suppose I better credit that to cash book. See if that makes sense to you. The cashier's entered a check payment into the cash book as 16, whereas it should have been 18. So if I credit once more a small item of 180, the 180 plus the 1680 will make up the 1860, and thereby I'll correct it. So that seems the most important skill. Work through the 8 items. You will not get 8 items in the exam. You probably get about 4. But it's nice to practice with eight items. You get more confident then. We cover more ground. So run through them saying now, does it go into the bank statement? Does it go into the cash book? And once you've decided between the two, you've obviously got to say, does the cash book go up or down? Does the bank statement go up or down? And based on that, or at the very least deciding whether it is a bank statement item or a cash book item, you then proceed to put it through. So once more, don't look at the answer. Let's see if we can correct the cash book and prepare a bank reconciliation statement. So turn to the page where you're doing all these solutions, please, as we attempt this together. And that should be the end of this wonderful topic that comes up regularly in the exam, more than once, very often. So here we are. Let me start a new page to be sensible about this. Example 2, so easy. Just be a little bit careful. Caution, so I'll write in red. Overdrawn scenario. Careful. Right, let's correct the cash book then. So a nice big attempt at the cash book, 10 lines long. Give yourself plenty of room. Cash book showing corrections. Debit, credit, I suppose. I mustn't forget that. Dollar signs, wherever you can fit that in. Lower down the page in the second half, let's prepare our BRS, Bank Reconciliation Statement. Any dates in this question? 30th of November 2007. 30th of November. Right, let's get back. The balance for the bank statement appears to be a 1550 overdraft, OD, oh dear, overdraft. Careful. In due course, I've got to say less unpresented checks. In fact, I might as well put that in, 58 40 and add the outstanding lodgements, simply uncredited items. Those are from items 3 and 4, of course, 8390. So that's in place, and as we did before, let's be sensible and sort out the cash book in case we've wrongly analysed them earlier and something needs to go back into the bank statement. So, the balance brought down, uncorrected, is said to be 2,400. There are all kinds of items like direct debits, etc. So I'm going to say DD. The direct debit is 225. There's a dishonored check. Of 1450. I mustn't forget to put in the 459 onto this side. Should put that in a couple of seconds ago. So the 459 has been put into the cash book twice. So entered twice as payment previously. So that's why we need to put it onto that side. So the 459 is in place. The 225 is all right. The dishonored check, we're going to bypass 3 and 4 since we've dealt with those. The 1450 has been dishonored by the bank, so I'm going to credit it onto the... You see, I put the money into the bank account, but the customer's bank has said there's no money. And the customer's bank has told our bank, and our bank has now let us know. So we're slightly behind as cash book, people who are operating the cash book. So there you are. What else do I need to bring in? There are some bank charges and backs transfers and one or two other items. So let's put those into place. The bank charges of 1400 needs to go in. The BACS, Bank Automated Clearing System, 6196 needs to go in there. Earlier omitted. Of course. And of course the last item is the transposition of figures. The 1860 and the 1680, 1860 and the 1680, the difference is 180. And so we're going to attempt to tie up the whole situation. So if we leave a couple of lines, we can see clearly the right-hand side is very light. It's 5655. Do be careful. This one's quite close, actually. The debit side seems slightly heavier because of the backs. So this is 6655. And if I put 6655 into here, the balance to carry down, which is now corrected, is 1,000, you see, and that comes down here as the balancing figure. And then as you work down the list, you find yourself with a running total here of 1,000 as well. So as you work downwards, if you add all that up, you find yourself with 1,000. It doesn't matter which direction you move in, but this also happens to be a positive balance. So that's an interesting switch from an overdraft to a positive balance. Balance as corrected is actually positive, but the most exciting thing of all is that the cash book reconciles, there's the magic word, agrees with the bank statement. You will notice that both of them are reconciled at 1,000. So do remember the way this is done. You either will get a ticking off exercise, or more likely you'll get a list of adjustments. Some of those adjustments will go into the cash book, some will go into the bank statement, bank reconciliation statement. By doing a few questions, you'll practice. So what I'd like you to do is to switch off the tape and rework those two questions. Do them blind without reference to any solutions to see how far you can get through them. The layout is important, speed of course. One of the great topics of the syllabus, I hope that made a bit of sense. Be confident, but the bottom line is what is in the bank statement is a credit balance. When you have money in the bank statement, is a credit balance. So you have money in the bank, it's a credit balance on the bank statement, but that same item in your books is a debit balance because, of course, you have an asset, just as the bank has a liability. So that brings us to the end of our bank reconciliation topic, one of the great topics in the syllabus, very easy and frequently examined.